Hi everyone, we're back. We've got a fantastic guest on our show today. We've got Nick from Unstoppable. Welcome, sir. Just as an intro quickly, Unstoppable is essentially a community-owned DEX. I think that's the easiest and the most accurate description in terms of what Nick and them are doing. Nick, welcome. It's great to have you. A little bit of an intro would be great. Tell us a little bit about yourself and also what you guys are doing and what you're planning to do.
Sure. So Unstoppable is actually a little bit more than a DEX. It is community owned, and or that's the vision we are working towards. But we are actually looking to completely replace the centralized exchanges. So we don't just want to offer a DEX in the form like Uniswap does for spot swaps, or like GMX does for perpetual swaps. We actually want to build like a complete holistic product that can compete on the entire feature spectrum with what the centralized exchanges are offering these days. And we are going to do it in the crypto native way. So we are not going to compromise on decentralization and self-custody, but we actually think it is time that we get a decentralized version that offers just the same features that the centralized versions offer, and that we get more people onboarded into the crypto native space where they have custody over their own funds, where they don't have to trust the centralized entities. And that's basically what we are out and building these days. Yeah, myself, I'm the founder and lead dev. I've been developing software for quite a long time by now, so around 20 years by this time. So I've been around the block a bit, and that's also something that our entire team characterizes. All of them are very experienced. We have been building, developing, shipping software both in Web 2 as well as Web 3 for quite a while now. And Unstoppable now is the first and only project that we are actually launching ourselves, and where we are in full control, and where we can shape the vision together with the community, and hopefully we'll be successful in replacing centralized exchanges with a better decentralized community-owned alternative.
So, I mean, what's really interesting about what it is that, I mean, you said a whole lot of interesting stuff, but the most interesting thing is that you are the founder and you are the lead dev. I mean, it's not often that, you know, someone kind of like steps up to that responsibility. I mean, I know that we've had founders that have run, you know, the role of dev, but they don't openly admit that, because it's almost like you're taking on that extra responsibility. I mean, it's a big thing to step up and be the face of a project, and then also be the lead dev behind the project. I mean, was there like a conscious decision around actually announcing that and making that something that would be, you know, relevant and knowledgeable from that perspective? Or is it just kind of like a natural thing? It's like, well, we're a community-owned DEX, you know, we're putting our cards on the table here, and it's just more of that. I mean, what was the thinking behind that?
I mean, in general, if that's what we are doing, then that's what we should say and show to the community. So we want to be fully transparent, and on not just that, but in general, we think this is the right way to do things. Beyond that, well, I do have an amazing team that is supporting me, so it's not like
Yes.
I'm doing everything by myself, and that's also good, because there are certain things that I'm not so good at, where I'm lucky that I then have team members that I can really rely on and fall back on. And also on the dev side, like, even if you have one experienced single dev, that's a good start, but it's not enough, because yeah, there's always parts that you're missing, or solutions that you don't think of. So it's always good to have at least one or two people in your team that are at a similar level from a skill and experience perspective, and that you can just bounce ideas off, or that will review your codes and your changes, just to make sure that everything is going well. And in general, regarding myself, I'm a builder first. That's what I enjoy doing. I like figuring out how we can build better solutions to what is out there, and how we can actually build products and bring ideas to life that add value to the space, to the people in it. and to get more people in it in this case as well. But yeah, regarding the marketing side, for example, that's not my strength, and that's where I'm lucky then to have team members that are going to help with that, and partners like you guys, that we can rely on, that will help us on that side. I think anybody who starts looking into Unstoppable will see that we are first and foremost builders, and we're not so good on the hype front, but that's also not something we are aspiring to. We understand that there has to be a balance between building and marketing and getting adoption, but we don't want to be one of the projects that are shilling and promising and not delivering. And yeah, I think anybody that looks into it will see that. For example, we definitely wanted to have the beta out there, public beta of our initial DEX product, so that people can actually give it a try and see which direction we are going. Like, it's not complete, it's not finished yet, but before we raise any money from any community member, we want them to have a chance to not just see a PDF and a vision, but actually see that we already have a pretty decent product out there, and they can give it a try and can see if they like which direction we are going and what we are doing, and then they can decide if that's something they want to be involved in or not.
So you've spoken to quite a few things there, and I just want to break it down, and hopefully we'll be able to unpack and provide even more context around, you know, what it is that you guys are doing. I think the most interesting thing that you just brought up now is that, you know, there's obviously this really important aspect of marketing a project, and what inevitably happens a lot of the time is that a lot of projects land up kind of like crossing the line, and they just take it too far, and then they land up promising things that they can't do. And what was really interesting about when we first spoke and you told us about your project, you know, we had kind of like this initial reaction that, okay, well, it's just another DEX, you know, and this is the and that's not to be dismissive of it, because I think DEXs are the perfect market fit right now. And we do have a very important transition to go through, I think, particularly from a DeFi perspective, in terms of markets establishing, you know, the perfect fit of those DEXs that will remain, that will come into the market, because I don't think those who have already arrived are now going to get a say. I don't think that GMX can ever be nonchalant about having the mantle of being probably the top DEX at the moment. Arguably with DYDX, they can't rely on their laurels to continue, because I think there will be a new entrance into the market that will obviously test that. You guys are planning to do that in more ways than one, and that's not just from a DEX perspective. So just coming back to our initial reaction, it was like, okay, well, it's another DEX. Do we really want to cover another DEX? And then obviously we chatted, and you were like, it's not just another DEX. You know, we want to take this thing a step further. We want to introduce a whole lot of ideas that essentially take away the whole idea that there's one or two people that are running even a decentralized exchange. Sure, it's a decentralized exchange, but the decentralized exchange does not actually participate in a truly community-owned aspect of what it is that they're doing. Maybe over time they do. Maybe they do it, you know, over 2 or 3 years or whatever the case is. But you guys are planning to do this whole ownership thing from day one. Can you just speak more about that? And I love this, because that's the reason why we're doing this with you guys, and why we wanted to tell your story. You know, at the end of the day, blocmates, we tell stories. We're storytellers around what projects are doing. We'll leave like the real marketing stuff to the real marketers, and we'll just focus on the exact value proposition that you guys are bringing around community. So I'd really like to hear, you know, what it is that you are ultimately aiming to achieve with this project.
Mm-hmm. I think what it comes down to is, like, the entire team are crypto natives. We have been in the space. We have made some money, lost some money. We have enjoyed the bull markets and suffered through the bear markets. We've had our fair share of rugs or bad tokenomics and stuff like that. And now this is the first time that we are actually building our own project. And this gives us now the control that we can decide how to approach these aspects, like tokenomics, for example, in a way that not just we from the project perspective think it makes sense or how it's profitable for the project, but we are always looking at it from the outside, from us as a potential community member. Like, would we be comfortable investing in this kind of tokenomics? Would we be comfortable in investing in this kind of project? Do we like the vision? Do we like the markets they address? Is there potential from a business perspective? What are the values the team and the project are representing? So when it comes to that, we really hold ourselves to very high standards, simply because we look at it from a crypto native perspective, from a community and investor perspective. Is this something I would be comfortable to become a part of if it wasn't run by or founded by ourselves? And I think that shapes a lot of the decisions that we make. And again, I hope that the people that start looking into Unstoppable will see that, and will see that reflected in a lot of the things we do. Like lately, one of the core values that we talked about is basically this term, like add value, be rewarded. We really want to give back. If you provide something that helps the project, that helps the community, and that helps the ecosystem, then you should get something for that. And as we said before, we are not really interested in the pure hype or shilling or something like that. We are not going out there paying 25 key influencers on Twitter and YouTube to shill our token launch or project. We actually went the reverse. We said now on Twitter right now we have this thread contest running. And we said, you know what, there is a lot of good threaders on crypto Twitter, and they are adding a lot of value, not just to the projects that they write about, but also to the crypto ecosystem, crypto Twitter itself. Like the amount of research they put out, and that is easy to consume for the rest of the community. That's really something where they add a lot of value to the space in general. And that's why we said, hey, let's do it the other way around. We're not going to pay people to write about us. We're going to say, if you wrote about us, you can retrospectively get a reward for that. If you added value to the space, then you should be rewarded. And yeah, in this context, we made it as a contest. There's a lot of prizes that are going to be paid out in our native token, and that people that write a thread about us can apply for. And then there's going to be a set of very strict judges, including you guys, that are gonna basically look at which one was the best, and gonna decide which of the prizes go to which threaders. But in general, this is kind of the underlying value that we want to represent, that we don't just want to talk about that, but that we actually want to do. That is basically just, if you add value to the ecosystem in some way, shape, or form, then you should be rewarded for it. And that goes through everything we do.
I really like the fact that you wanted to approach it from that perspective. I think there's a lot of lessons to be learned, and even for us as storytellers, it's kind of like, if we were going to look at doing a project of our own in the future, I don't know if we ever will, but if we did, this would definitely be the way that we would approach it as well. Is that I think there really is no substitute for true participation around being motivated to be a part of a project from that perspective, because you also, in terms of your prizes, you're not looking at it as a separate thing. You're saying we will include you in the project in terms of giving you value in the project, whether it's tokens or whatever the case is. I think that's really cool. Something that I didn't do at the beginning of the interview was ask you the obvious question, and that is, why have you guys called it Unstoppable?
Again, it goes a bit to the crypto values. So like, one of the things that we really like about the blockchain and the code that you can deploy on a blockchain in the form of a smart contract is that once it's deployed, it's unstoppable. So if you, like, with a little caveat, you need to make your contracts non-upgradable. which is really important. If it's
Yes.
possible, you should always do that. But if the contract is non-upgradable and there's no special admin privileges, then the code is out there and it will run as long as the blockchain Ethereum runs, as long as the internet exists. And that's a really cool concept and something that we didn't have outside of blockchains. Like nobody can decide to shut this thing down tomorrow, and nobody can decide you may participate and that person over there may not. So these are some of the crypto native values that are very dear to our hearts and that we love in the space and why we are building in this space. And then this, or based on this, basically just the term unstoppable and calling the project unstoppable just came naturally. And we really like it. We hope the community will like it as well, and we will get a lot of good memes out of the potential from the name. But yeah, it reflects very well some of the core values we believe in, and we're happy to have chosen that name.
In terms of the fundamentals of the DEX itself and my ability as a user to trade, can you just talk us through what it is that you guys have planned for launch? We'll talk about, obviously, the aspects of the launch afterwards, but I just wanted to understand, in terms of the product itself, what are you guys wanting to achieve with it, and what do you think will make Unstoppable as a DEX, primarily as a DEX, enticing and interesting from a user's perspective? Because at the end of the day, that's what you need, that's what you want, and how are you going to attract those users?
Yeah, definitely. That's a great question. And I think it comes down to two main things. Like maybe just one step back before that. So with Unstoppable, we call it the 3 pillars that we are going to focus on and going to launch over the coming year. The first thing will be the decentralized exchange. And that will basically be the foundation that will be in place, that will cater directly to the crypto natives out there that are currently trading and are looking for trading opportunities or platforms. But it will be the foundation for the products that we're going to build on top in the later stages. And then outside of the DEX, we have the bridge, which is going to be a Fiat integration. So integrating the crypto world with the real world and making your crypto actually usable in the real world. We think, unfortunately, it will still be some time until you can buy your groceries or your coffee around the corner with native ETH or maybe Arbitrum token soon. So for now, we believe there still needs to be this integration and this bridge between the crypto world and the fiat world, the real world, to make it really fully usable. And then the third aspect will be the Unstoppable wallet, and that will basically be a simple to use interface that will allow people that are not crypto native and that are maybe not as tech savvy to also participate in this crypto world. And I'm sure we can go into a bit more detail on those later. So getting back to the DEX part. So from our internal perspective, this is the foundation. So this needs to be out first. But beyond that, we see 2 main things. One is we're trying to build products that we ourselves actually want to use, and with features that may or may not already be covered so well by other projects. And the second part is, and that's why we are trying to also make sure that we are not just saying we are a DEX or we are launching a DEX, but we are actually trying to launch a product that is replacing the centralized exchanges, that we are looking at what are these guys doing and why are people still using the centralized exchanges, and what do we need on the decentralized side for these people that they can just switch over. Because like if you have 2 products and one is central, like they are feature comparable, everything the same, and one is centralized and you have to trust a central entity and the other is decentralized and you can control your own funds, then obviously the second one, the decentralized one, is superior, and we, like everybody, would choose that. So we have to look at it. Okay, why isn't that the case yet? Why are people still choosing the centralized version? And yeah, as we've seen with FTX, things can go wrong. Even if you think they are maybe too big to fail, sometimes you will just be wrong. And if FTX had been built on the underlying principles of decentralization and self-custody, then that couldn't have and wouldn't have happened what happened there. So looking at the feature set that we are planning to launch with, one is going to be the margin trading, and that is a space that has been pretty much on fire over the past maybe 6-8 months. GMX has definitely been the big player there that has shown that there is a demand, that there is a product market fit, and they are great guys, great project, and we don't see ourselves as a direct competitor to that. Because what we are building is, like, on the surface it might look similar, but the underlying is very different. And one of the key aspects that we do and that we're going to launch with in the beginning is that we are basically offering leveraged spot trading. So the difference is with some of the other projects out there, what they are offering is like perpetuals or future contracts. So you're not actually trading ETH, the underlying asset, but you're trading a virtual ETH that is trying to be kept in line with the actual underlying. And to keep it in line, they then need things like funding rates, for example, that go from longs to shorts. They need to make sure that the open interest between longs and shorts is kind of balanced, so that the risk towards the LPs, which are taking the other side of the traders, is limited. And we thought, okay, this is not ideal. There is actually a better model out there, and that is offering leveraged spot trades. So what that means is that for the traders, all trades that they execute on the Unstoppable DEX all the trades are gonna be backed fully one-to-one by the underlying ETH. So if you go long ETH and with a 10 ETH position, then we actually go out there and purchase 10 ETH for you in the smart contract. And one aspect is that will help the price discovery of the underlying of the ETH. If there is a ton of long interest in a perpetual exchange that doesn't directly do anything to the ETH price, it doesn't directly show the demand on the ETH price. Only through secondary effects like the funding rates that then are getting arbitraged. There will also be some buy pressure on the spot markets. With the concept we do, we actually go out there and buy the 10 ETH. So there is directly the demand on the ETH spot market, and that will show, okay, there's people who believe that ETH price right now is low and that it should get higher. So that will help a lot with the price discovery. And another interesting aspect is that it allows us now to, from the tech side, to basically offer a form of under collateralized loans to the traders. So you deposit maybe 100 USDC, and then you can borrow from our liquidity providers another 900 USDC. And then we go and buy with 1,000 USDC ETH on the spot market. And what that means now is that traders and LPs are not trading against each other. It's not a you win, I lose, or vice versa type of setup. So the liquidity providers are not actually taking on the other side of traders, but instead they just provide the liquidity that the traders want to leverage up their position. So for the LP side, it's more comparable to a money market like Aave, for example. You can provide single-sided liquidity. You don't have any exposure to impermanent loss. You're basically just offering your liquidity to be borrowed by traders. That allows the traders to lever up, to buy a bigger position than they could if they would go directly to a spot market. And then we, or the smart contract, goes to the spot market, buys the underlying, so that the price risk is, there is no price risk because it's not hedged. It's the actual underlying that we hold. And then the only risk for the LP side is then that we need to make sure that the liquidations happen, because it is an under collateralized loan. So the trader put in 100, but he borrowed 900. So now he has an ETH position of 1,000. And if now price goes against him, so if price of ETH goes down, it can go basically down up to $100. And then only the trader would lose money. But if it would go down $500, then the trader can't pay back the liquidity provider, which would be an issue. So in that context, our liquidation engine will jump in and will make sure, okay, if price moves against the trader, and it's getting spicy that he's about to lose all the collateral he put in, then we will actively liquidate him, or other market participants may. Then that will mean that we swap the ETH back on the spot market to USDC. We pay the USDC, the 900, back to the liquidity provider who lent the money. And then whatever is left is either the profit or the loss for the trader, and that will go into his account. So the main differences that we have is that we are offering leveraged spot trades, which on the trading side helps the price discovery. Probably it will also be a bit cheaper for the traders in terms of funding rate, because we don't really need that funding rate directly. We can use it as an interest rate, as a borrow rate, and pay directly to liquidity providers. That should mean that the yield for LPs and for the UND stakers, our native token stakers, should be in theory higher. But all of that we will see when we have some actual real world usage, and we see how things are going, how many people are interested in the LP side, what the utilization rate is on the trader side. But we do have a few levers to play with there to make sure that it's going to be a healthy ecosystem that is really offering advantages to both traders, liquidity providers, but also the protocol and the stakers. You're muted again.
It's probably one of the most comprehensive breakdowns of a protocol that anyone has ever given me in an interview.
The question is, was it also understandable?
No, it's brilliant because from my perspective, what it does is that it gives me great reassurance in terms of what it is that you are doing is very much. Obviously, there's a theoretical construct here. Yes, you guys have built a beta. So for obviously our listeners and to our viewers, there's a beta currently running for Unstoppable. But ultimately, a lot of the concepts that you've presented to me in that delivery was there's a lot of essentially experimentation that will happen. Sure, the fundamentals are in place, the contracts are in place. The delivery of this experiment is there. It's going to be really interesting to see, and I want to get into that now. And it's going to be really interesting to see how essentially this thing plays out. You know, from a game theory perspective, as individual traders, as liquidity providers, as stakers, and holders of the UNC token. So before we get into kind of like the nitty-gritty of it, I think it's really important to speak to the idea and, more importantly, the ideology behind the token, because every project likes to have a token, and it's kind of like this whole motivation around how do we get value off a governance token, for example, or whatever the token's purpose is. I'm going to ask you about the token. I'm probably going to get a lot more than I can chew on, just like I did with my last question, but we can come back to it and see whether we can tell the story in a way that will allow for the viewers and for the listeners to understand what the very essence of what it is that you guys are doing. But I think what it'll also do is it'll allow for us to potentially set up a chapter 2 of this conversation where we do really get into, you know, the really meaty stuff of what it is that you guys are doing. So tell us about the token, what it is that you guys have got planned, and how you plan on giving value back to those holders.
Yeah. So actually, like you said, every project wants to have a token, right?
Yes.
And initially, we were quite on the opposite end. We said, you know what, we are not going to launch a token until or unless we actually have a use case for it, where it really makes sense. And that again goes back into what we talked about earlier. Like for us as crypto natives and investors ourselves, we don't want to buy a token that has no use case and no method of value accrual and no perspective. So initially, like when we started Unstoppable, maybe 6-8 months ago, when we really started, we didn't have a use case yet. We didn't know yet that we are going to go this route, that we want to replace centralized exchanges. We already knew what we want to do, like on a high level. There was build the best risk reward products in the space, and democratize the access to crypto, make it easier for people to participate, especially those that can't yet or are afraid to do so because it's too complicated. So a core focus on good UX, on simplifying access and building good risk reward products. But in that context, we didn't really see like how could a native token come into play. So we said, we're not going to do it. We're not going to start with a token sale and just an idea until we actually have a use case and a need for the token. And we probably don't want to go too deep into that, but during that phase, we then came up with an alternative funding concept that we call the fair funding. And that's built on Alchemix's self-repaying loans. And it was specifically designed for these type of early stage startups or crypto projects like us that really want to build in the space and really want to add something of value, but where there is no real need for their own token yet. So we came up with a great concept, built the prototype with Alchemix together. It took a while now until it went through the full audit and everything. And in the meantime, basically, we kind of outpaced ourselves. After the FTX debacle, we figured, hey, actually, this is the thing we want to do. We do want to build a real replacement for centralized exchanges that is true to core crypto native values. And within that concept, then suddenly it made sense. Hey, you know what? There is now a real use case for a native token. And the three core things that we wanted to cover with the native token and with the token design was one, this is a community-owned project. So there needs to be a form of revenue sharing, a form of real yield is the buzzword these days, or has been for a while now. But it's great. So any project, any token that should have a good business model that brings in profits, and if it pretends to be community owned or actually is community owned, then it should definitely have some mechanics in place how part or all of that revenue or profits flow back to the community and the token holders. So that was one of the, or probably the most important aspect for designing our own token. But then the two other aspects that we really wanted to cover and get in was, one is we want to align incentives long-term. So we want to find a way how, going back to that initial thing we talked about, add value, be rewarded. That's the goal, and that should, the token and the token model should reflect that and should support that idea. And for example, one thing that we don't like is the default liquidity mining that a lot of projects do. They deposit this many tokens of the native token, and when the big guys come in first, they get a huge share of that, paid out really quickly, and then they dump all of that on the market. And then once the APYs go down, they leave the LP pools again and pull their liquidity. That's not something that we see as like net positive for a project. So yeah, aligning long-term incentives is another key aspect that we wanted to cover. And then the third point was we want to make sure that the community cannot be dumped on. Like, we ourselves have been in projects where there's big unlocks or big VCs that got in at cheap prices or something like that. And then suddenly you wake up and you look at the chart and it's down 15% and you don't really know why. Or you probably should know why. But ideally, or an ideal token would prevent that in the first place of being possible. Also, like not too long ago, we had an issue with one of the Arbitrum projects where there was a dispute between the founder and the team, and the founder basically sold all his tokens. And that's basically a scenario that we also think a good token design can cover and can prevent in the first place. And yeah, so these are the three key aspects that we wanted to have our token reflected. And that's how we came up with a dual token model. The primary token is the UND token, UND. And it can be staked for a share, no, actually for all of the profits of the platform. And the only way to get it will be in the initial token sale. That is gonna launch in 1 week on the 29th of March. And only the community plus the DEX liquidity that we need to provide to enable trading. That's the only tokens that are going to start in this native UND token form. And then everything else, so team allocations, incentives, partnerships, all of that will start as the second token, and we call it EUND. So the earned version of UND, you add value, you earn EUND. And EUND itself can also be staked, for example, for a share of the revenue, or it can be vested linearly over 12 months into the unlocked native UND token. And that will then allow you to sell it against our protocol provided liquidity, protocol owned liquidity. So we're going to set up a deep liquidity pool on Uniswap v3 together with Arrakis Finance, who is going to help us manage that liquidity. But yeah, so we have this dual token model. The UND token will be only available to the community in the public sale. Everything else will start in this second token, which cannot be dumped on the community onto the UND token, onto the UND liquidity, but it would need to be vested over 12 months to be able to access that same liquidity. And with that dual token model, we are now pretty happy because we do cover the 3 key aspects we set out to achieve. There will be revenue share. You will be able to stake it as soon as we go to mainnet, and there will be revenue and profits for the protocol. 2, the long-term incentives are aligned, because right now, if some predatory farmers come to grab the incentives early on, they can do so, but they will get the earned on token, so they cannot dump it onto the community. They need to vest it over 12 months, which will hopefully be enough time that they actually get excited and invested into the project and might be more happy to stake it than to vest it and sell it. And then the third key aspect that the community cannot be dumped on, and that is the dual token model, where that's in place. And yeah, overall, we're pretty happy with the design. The feedback has been really good that we've gotten so far. The token distribution is also very community centered. So 57% are assigned to the community. 20% will be available in the token sale now. 10% will be for the DEX liquidity to make it tradable immediately. And then a large portion will be in the growth fund that we are going to use for incentives and to distribute the token and to create adoption and distribute just to the community in different forms as needed to create a healthy ecosystem. And yeah, on top of all of that, we also said that team and advisors will not start vesting their EUN tokens into the UND tokens for the first 12 months, just to add some more confidence for the community that we are not here to do anything illicit and dump on them in one way or another. We actually also decided to not build that 12 months lock into the smart contract. Instead, we are going to make all the team wallets public, and anybody can call us out if we were to start the vesting. It would still take 12 months, so there's no real risk for the community, and they can just keep an eye on the wallets and make sure that we keep our words. And so overall, I'm pretty happy. The feedback has been pretty good. And we're excited for the token launch coming up now.
Great. I mean, this is, I think in many ways it is unique. I mean, in terms of the team allocation, what is the percentage that you guys have allocated for that?
We have 10% for the core team,
and
then we have 5% for team growth over the next years. And that's the internal allocation.
Yeah, I mean, I think from our perspective, that was also one of the things that we really appreciated about what it is that you guys originally presented to us, in terms of our due diligence around what it is that you were doing and how you were going about it. And more importantly, what was ultimately the value proposition that you guys wanted to put on the table. And it's very obvious that you are being mindful around people dumping, trying to keep people interested from a liquidity mining perspective, from liquidity provision perspective. You're obviously going about it in the right way. Let's keep the guys here. let's not encourage this predatory approach to liquidity mining, because that's been the biggest problem and will continue to be the biggest problem unless, you know, fundamental solutions are put in place through this experimental process. It'll be really, really interesting to see how you guys contribute to that narrative and whether this might solve that problem. You know, it seems like it could. We don't know. Like you said, let's see how it works out in a real case or in a real world case. So definitely going to be keeping attention on that. There were a couple of questions that I wanted to get into just around the fundamentals of the tokenomics themselves, but I think what we'll do is we'll save that possibly for another show, because I think there are complexities here that I would much rather also keep for, you know, like kind of like a chapter 2, not only for an interview but also for an article. And I don't want to let too much of, you know, kind of like the gem aspects of, you know, there's gems here. There's some real alpha that you've potentially presented here, and I'd like to save it for later. I want to get into what's really important about what's coming up in your calendars. Obviously, the 29th, we've got a launch, we've got a public sale. You and I discussed this prior on quite a practical and also more importantly on quite a philosophical level around what it is that we really enjoyed about a public sale that happened last year or the year before, actually, in DeFi, and that was obviously the Redacted Cartel auction. And there was a discussion around doing kind of like a public sale primarily, but the method was always in question. And we both liked the auction, but there was obviously a little bit of uncertainty around kind of like the contract setup and how you guys would go about doing that. It definitely looked like it was going to be a lot more work. Obviously, in light of meeting you even more so and hearing your story, I'm not surprised. If I'd known this about you beforehand, I would have told you from the first minute that we spoke about this was going to be, Nick, you're going to do the auction, you're going to sort it out, even though you have your hesitation. And that's what's happened, right? You guys did make a public announcement that you were going to do the auction. Tell us about it. Tell us, just walk us through, you know, obviously your feelings around why you liked it and now what it is that you guys are doing and how you see it playing out.
Yeah. We just wrote an article about that as well that explains a bit our thinking behind choosing the...
I'll definitely link it in this interview below. Absolutely.
Yeah. So you mentioned the Redacted Cartel or Butterfly token launch like a year ago or a bit more. And that has really been one of the best received launches, and
absolutely.
One I also participated in. And I think the reason why people were happy about it was a few key aspects. One was everybody in the end got the same price. So it doesn't matter if you contribute early or late. If you contribute within the phase of the auction, you will get the same price as everybody else. That's a great start, because like making it fair and everybody starting at the same starting price, that's really essential in our opinion for if you consider it to be a fair launch. And then the second key aspect was that the valuation is set by the community, by the market participants. So you can have either a fixed price token sale, then the team will decide what the valuation is, what the price of the token is, and then you can take it or leave it as an investor. But yeah, we think what it should actually look like is like an active price discovery by the market that allows the community to choose. This is a valuation that I'm comfortable investing in. But if it's a startup and it's maybe pre-product or pre-mainnet launch or something, then you probably don't want the valuation to be at 500 million or a few billion or something. So it should be a method that allows you to, or allows the community as a whole to decide the final valuation, but also as an individual investor, it allows you to limit your risk. And now the primary difference between an ascending price auction and a descending price auction, and Butterfly Redacted Cartel did the descending price auction. And what that means is basically that there's a starting price, and then price will tick down with every block. And by price ticking down, that also means the valuation of the project obviously ticks down. And then you can take a look and you can say, okay, now is a valuation that I feel comfortable with investing regarding the project, what they intend to build, what the addressable market is, what the margins and revenue models are. This is what I think personally makes sense. And if you commit at this point and everybody else would commit at the same block, you would end up with exactly that price, the price you felt comfortable with. But if the tokens don't sell out in that same block that you commit in, then price will just keep going down and you will basically get a better and better deal and a lower and lower valuation. But it will never be the other way around, where you invest and you commit at a certain level, a certain price, a certain valuation, and then somebody else comes in after you and drives price up. And you end up with a valuation where you say, shit, I don't want to invest in a startup that's valued at 500 million. That doesn't make sense. So the descending price is the third key aspect, I think, that made Butterfly so successful. The token launch they did, they didn't come up with that concept as far as I know. It's like often called a Dutch auction or a descending price auction. Sushi Miso, the Miso launchpad that Sushi worked on a while ago, they just announced that they are going to sunset it because it hasn't seen the adoption that they want to, but they also had that type of launch mechanic in place. And that was actually good for us now because we could basically use the Sushi Miso contracts that have been audited, then had been hacked, then had been fixed, and had been used now for quite a while. And we could use them as battle tested starting point. And we basically took their contracts now. We added one more thing that we think is important that goes back to our, if you add value, you should be rewarded. And that is referral codes. So we think if you drive investment to our token sale, then you should get a kickback for that. So we implemented a referral model. You can register your own referral code. You can share that with your friends or other investors. And if they commit with that referral code, then you will get a kickback. That's the only change that we did to the contracts. And we only did it in a way where we are not touching any of the important logic. So we are only emitting like one more event in the smart contract that will allow us to track which referral code was used. And then all the processing and the claiming for referral codes, we will do in a separate contract afterwards. And that way we can now, we as Unstoppable had decided, okay, we are going to use the same model and we are not going to make compromises, because right now we couldn't find a single launchpad out there that actually offers all of these features that we want, like descending price auction, referral codes, really make it as fair as possible. And since we couldn't find a partner that would allow us to offer all of that, we then decided, okay, we are not going to compromise and not going to choose a model that we ourselves would be less happy with investing in, but we're going to go with the full package, even if it's more work for us. But I'm happy that we went that way. I think long term, it will always be better to stay true to your beliefs and your values and reflect them in your work. And now everything is ready, and we are looking forward to the 29th and then see what the community thinks.
So Nick, have you guys essentially set yourselves up by building potentially another product that you could incorporate into your offering in terms of a launch pad, or is that just something that you guys did for yourselves and you're not really planning? I can see you probably will.
We definitely did it for ourselves, but actually
Yes.
what came out of that now is like 80% ready, a launchpad. But we already have a lot of things that we want to build. So like one of the key aspects that we are trying to always check is, are we focused enough? Are we focused on the right things and building the right things? So potentially there might be a launchpad at a later point, but right now we have our own launch, and then the full focus will be on getting the margin trading decks live on mainnet. Ideally in Q2, we'll have to see how it works out with the audits, because we're not going to launch until we get some proper audits. But yeah, so this will be the core focus. But yeah, as you said, there is probably a 80% finished product by now that really reflects some of the core values that we believe a token sale should look like. And that could also tie into the thing that we built with Alchemix beforehand, the fair funding model. So there is a lot of synergies and potential, but it's not going to be the core focus for now. For now, we want to replace centralized exchanges, and the launchpad might come after at some point.
A very important part about what it is that you spoke about that I really need to mention, one of the big things that we've seen over the last 2-3 weeks, particularly, is the stranglehold on and off ramps, and I know that that's something that you spoke very passionate about in the past before, and I wanted to just get an understanding around, practically speaking. I mean, it's easy to sit there and say, well, we want to have easy on and off ramps. I mean, we're working with particularly a corporate at the moment who issue stable coins. I mean, they're regulated, they're New York based, and they're starting to find it really difficult to participate in the on and off ramp market, even themselves, and they've jumped through more hoops than probably you and I will ever understand from a US perspective. How are you guys planning to solve that very, very difficult and challenging aspect of on and off ramping? Because I know that that's something that you guys feel very strongly about.
Yeah. I'm not sure if we can answer that really quick in a few minutes. So maybe that in itself should be an entire longer discussion. But just touching on it really quick. Well, before that, a lot of things are changing right now regarding regulations, regarding banks collapsing, regarding the entire financial markets. So we'll have to see how things look in a few weeks or months regarding some aspects. But the basic idea is, or that we had, and also what we have seen from the regulators regarding stablecoins, for example, the core thing that they are concerned about is it one-to-one backed? Is it redeemable? And doesn't it interfere with the monetary policy that the central banks should have? If you can,
yes.
Yeah, I think that's a good thing in general. In the current setup, it's a good thing. If the current setup is good, that's a different discussion. But within the constraints of the central bank and the Fiat system, it's a good thing that there's one central party that can divert the policy in a way they think is fit. Whether that's a good, what comes out of that is good or not is a different discussion. But so I understand the concerns from the regulators that you shouldn't have a stablecoin, or you shouldn't be able to print infinite dollars just because it's on a blockchain if it's not backed one-to-one. But if it is backed, then regulators seem to be pretty happy with the concept, and they see, okay, at least some of the regulators, maybe that's constraint, but they seem to be okay. And we've seen announcements from their side that they acknowledge that blockchains are a new technology and that there is a lot of potential. Hopefully, we will not go down the route of CDBC with advanced features, what they are going to call it. But we would much rather have a digital cash format. So on and off ramp, the way Circle and Tether does it right now is, let's assume they are fully one-to-one backed and they are not doing any shenanigans behind the scenes. But the way they do it is right now they get some money into their treasury account, and then they mint the USDC or USDT at a one-to-one ratio. And then that is locked in the treasury account on the traditional finance side, and it is liquid on the blockchain, on the digital side. Can be used by anyone, can be transferred, can be whatever you want in DeFi. And then to unlock it in the treasury account, you basically need to burn it on chain. And that concept in itself is great. The only issue with it is you need to be Circle or Tether, or one of the big whales with deep pockets that got their own account at Circle. I think at least at some point they offered that, probably not anymore. And we said, okay, there's actually no reason why that shouldn't be democratized, why you and me shouldn't be able to put some dollars into a treasury account, and that will automatically mint ourselves the same amount of digital dollars or stablecoin dollars into our wallet. And then we have a digital version that we can use. And for the off-ramp, we just go the reverse. We burn the token on chain, and then we tell that bank that is holding the treasury, hey, now move the $10 that were just burned on chain and move them back into Jedi's bank account. So that in itself seems to be what the regulator wants. It's fully backed. It's fully transparent. Ideally, we will want to work with Chainlink to provide that Oracle infrastructure to monitor the treasury account and then directly integrate with the smart contracts on chain, so that the smart contracts itself can't even mint more stablecoin dollars than there are sitting in the bank accounts. And then, there's really no reason why that shouldn't be possible from your bank account, from my bank account, from everybody's bank account.
That's brilliant. So, I mean, are you guys are going to write the contracts, transparency, immutable, permissionless, all of that? I mean, is that something that you guys have done already, or is this part of your obviously you raising, essentially the public sale is raising the funds so that you guys can go and build? I mean, you guys have built a tremendous amount already off the back of your own money. I mean, I think that needs to also be stated in light of, this discussion. It's like you guys you've done no public rounds, you've done none of that. Is that correct? It's all your own cash.
That's right. Yeah, we did everything, bootstrapped everything, self-funded up to this point. We had some very enticing offers from VCs, at least when you see the numbers on paper, they look nice. But we always said we want to be community first. We want to do one public sale where everybody gets in at the same price at a fair valuation that is going to be decided by the community. And we're not going to do pre-sales. We're not going to do private rounds. We're not going to do seed rounds, and we're not taking in VC money. So that was very important to us. As a founder, it has been quite scary at times as well. When you say no to 7 figures, while you see your own funds going down every month, and there's going to be a hard stop somewhere down the line, and you don't know if it's going to be before or after the product is ready. So I think it's still going to be the right decision that we went that route and that we stay true to what we believe in. Now we are raising the funds from the community to allow us to build these next few months and maybe 1.5 years. But we also don't want to raise more than that. So we're purposefully looking at raising like a rather low valuation, and then give the community the best entry price, while at the same time raising enough so that we can actually deliver the things that we are talking about in a quality that we are happy with and that we feel comfortable with. So it has to be a bit of a balance, but at the same time, we don't want to raise 20 million at a 100 million valuation or anything like that.
So tell us just quickly in terms of like what it is that you are planning to raise and what the evaluation looks like from that point of view. Just get into that. Let us know what that looks like and what potential investors have to look forward to.
So we will raise in ETH. So the floor price we set is going to be 666 ETH. So that's going to be the absolute minimum, the soft cap. If we can't attract that amount of interest from the community, then it won't work going that route. Then we have to figure out a plan B. Hopefully that won't happen. With the descending price auction, we will start at a rather high price. And the reason behind that is not that we want to raise at that starting price and hope everything sells out in the first block. But the reason is that we want to disincentivize snipers, bots, and whales of buying up too much before the community gets a chance to commit themselves and secure themselves a part of the token sale allocation. So I think the starting price is 10 times the floor price. So it would be 6,666 ETH. That would be a bit too much. And we are hoping that the community will find the right valuation in between those two extremes. And then we will have enough to provide liquidity for the token to ensure that we have the runway to build the product. But at the same time, one of the goals we have is definitely to get the DEX and the mainnet launch now as soon as possible, and then start generating revenue and get extending the runway through the business model itself, through generating revenue itself. So that's why we said, okay, the soft cap is rather low. That's the minimum we think we need to launch the product and bootstrap it to the point where it will be a safe sustaining model then and give us the runway we need to build the rest out. If we get a bit more, that would be great, because then we can provide deeper liquidity for the token itself, and bootstrap the liquidity on the DEX side, for example. So it does give us a bit more room to play with, and again, also provide value to the community in the project. But at the same time, we don't want to go overboard and raise at 100 million or something like that.
Great. I mean, it sounds very reasonable. Not only in terms of the proposition that you have, but also around the pricing and the methodology. I think the only concern I might have is people holding out towards the end, but then they potentially could be alienating themselves, and then they'll end up missing out on the sale, and they're just going to have to land up buying the token, on market directly, which that's just a risk they're going to have to take.
Exactly. Yes.
Yeah, absolutely. I mean, I think in terms of the liquidity itself, I mean, that's how much are you guys portioning? What is the percentage that you guys are portioning off from your raise primarily for liquidity?
That will depend on how much we raise. We definitely have a minimum. As I said, we're going to partner with Arrakis, so we're going to go with Uniswap V3 liquidity. So that will allow us to be way more capital efficient and not just need to put all of the liquidity or all of the raise into the LP pool to have decent liquidity and acceptable slippages. So the model we are planning to do is that we are going to give Arrakis a portion to manage actively, but then we will also have a backup liquidity of around the same amount that we ourselves will put over a very large range into that pool, so that Arrakis is managing the liquidity actively, so they're gonna adding and pulling ranges in the V3, and just in case something there goes wrong, if their algo that decides when and where to put liquidity would misfire for whatever reason, then we want to have a backup where that's why we add a large range liquidity ourselves. So that part we will also lock, or at least put a time lock in, so that we can't just pull it. The community can be sure that that liquidity is there and it can be removed from 1 second to another. And then Arrakis will do the active liquidity that will most likely cover 90% of the actual trading, and the part we put in is just to ensure the community that there is liquidity and that cannot be pulled at any moment.
Yeah, I mean, Arrakis, good friends of ours. They've been around the block. That team has been around for a very long time in terms of the individuals involved in that. Great partnership.
Great guys as well. Yeah. We talked a bit with them. Very professional.
Yeah.
Really good guys.
Yeah.
Looking forward to work with them.
Squirrel is very close to us. He's been amazing. He's helped us before in the past. Yeah, just good people. I think that's really great to hear that they're involved. And I think Arrakis is going to be coming up a lot more in the future. There's no doubt about it in my mind. I think they're going to be a big player in the space. Obviously from a market making perspective, they know exactly what they're doing, and the mechanism that they have running it's brilliant for you guys. So well done on that. It's interesting. We had an interview.
They have never done it for a launching token. They only ever did it for existing markets. So it's going to be exciting for them and for us. And not sure if everything will go 100% right from the start, but that's also why we put in some liquidity that is going to cover the full range. And then we'll see how it works out. But it's going to be an interesting experiment. And we think it will be definitely good for the community and the liquidity.
I have no doubt that you guys won't have any problems. I can't see you guys not having run simulations of this thing at least 3 million times. I just have a feeling that it'll be seamless. I hope it is. It's interesting. We've had this interview around the DEX, and we've actually, and what it is that you guys plan on offering. We've spoken about the mechanics, which is great. But I think it's been a really cool interview just purely because we haven't really spoken about, the UI, the UX. I think that's something that people need to go and check out. I think you guys, it's an evolution, this thing. It's going to evolve in terms of what people want and how people want it. I'm not going to speak about it at the moment because we have reached the top of the hour. I've really enjoyed the interview from the perspective that there's a lot of really positive stuff around the planning that you guys have done, but more importantly, it's not just about a plan. You've done a lot of the work already. You've done tremendous amount of planning from what it is that I can hear. And also, your intention is very much sound from, there's no like, you're not unsure about stuff. It's really cool to hear. It's kind of like you've drawn straight lines, you've drawn clear lines in the sand. This is what we want to do. This is how we want to do it. We're willing to compromise, but the essence of what it is that we're trying to achieve here is not something we want to compromise on. We'll compromise on how we get there, but we want to get to this destination. And it's been really cool to hear your story at the moment. We'll continue to tell the story. We've got a number of articles that we still want to write about you guys. For our viewers and for our listeners, we've written a introductory article to what Unstoppable are doing and what they plan on doing. So we've got a long form article out. We will be expanding into other articles going forward. We find this project to be really interesting because of what Nick and the team are doing and what they plan on doing. And the more the time passes and the more the partnerships that you guys formulate kind of like reinforces what it is that you guys are planning to do as well. So it's really cool to see kind of like the growth of this thing. 29th, we have this public launch, my favorite format, as we've discussed. I really look forward to that. We will put details in below in terms of, links to articles. I want to get that linked to the way that this auction plans on rolling out. Thanks, Nick, for joining us. Good luck.
Thanks a lot for having me. Yeah, it was great talking to you. And
it has
you
been.
guys are
It's been really cool.
doing a great job on your end. So we are very happy to work with you. And
yeah, man, it's been great. So all the best for your launch. We definitely I can't wait to see that auction again. It's just something that I really missed, and hopefully we get to see it again. So maybe we can have this conversation again where I told you were going to set up another aspect to your protocol. I told you. So let's see how that plays out. I know it's needed. And all the best, Nick. I really appreciate your time today, and take care.